Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, let's update our current view on euro currency. Well, on the daily time frame chart we do not see a lot of action, since investors, as we said yesterday, just expect for the important data that should be released today. And that's why market in fact is calling and standing in the tight range, forming side by side inside sessions. Well, probably would not see much action till the moment when the gross domestic product will be released and before the European Central Bank statement. Well, speaking about our yesterday's pattern that we have discussed on the 4-hour time frame chart, and where we have talked about this potential double repo buy. Well guys, although we have got some appreciation, this market slightly has moved to the upside, that is not the action that usually should follow after the double repo. Double repo is the fast pattern, and usually it indicates the capitulation of the bears if we are speaking about double repo buy. In fact, the second leg of the double repo is the last attempt of the bears to move market lower. When they couldn't do that, they are capitulating and market just accelerating to the upside, grabbing the stops first that had been placed here of those who have entered to the downside thinking that this could be just a retracement, market should continue to move lower. That's why usually double repo leads to some fast action in opposite direction, but here, especially if you take a look at the hourly time frame, you do not see much action. So this is rather choppy action with the small candles, fast move up, move down. So this is not typical for the double repo. That's why even if you have the long position, of course you can hold it, you just move your stop to the break even, because maybe it's not bad idea just to close it, because the price action that market now is showing is not typical, not common for normal development of the double repo pattern. It's too choppy. That's why better to treat this action as just in a consolidation, indecision, something like that sort, just expectation. Another reason why I do not want to hold the long position here, and personally I have closed this long position that I have taken by this double repo, is the situation that we have on the New Zealand dollar. Recall that our trading plan was on the New Zealand dollar, taking the long position here and expecting a bounce up, because this could be the head and shoulders pattern. Now you could see that this has happened. Market has hit the area that we have specified. Very harmonic action. So you can see this candle stands approximately at the same high as here. So here we could get the head and shoulders, and potentially this is the reversal pattern to the downside. But another reason why I do not want to hold the long position, take a look at the yesterday's trading session. We have the bearish stop grabber in the direction of the previous plunge down, right from the top. So this pattern suggests at minimum taking out of these lows. But if this will be really a reversal, and if it will be really the head and shoulders, that probably could be at minimum ABCD to the downside, or even deeper move to the downside. The invalidation point of this pattern stands at the top of this candle. It's approximately 84.14 area, 84.15. It's right here. So until market wasn't taken out of these highs, this pattern will be valid, and it's bearish, as well as overall situation here is bearish. That's why taking into consideration the action, the nature of this action, the behavior of the price, that is not, as I said, thrusting action, not impulse action. That's just a contraction of the market, very choppy action. This is not the double repo price behavior. It's not absolutely typical for the double repo reversal. That's why be careful with that, and if you would like, you even could try to trade this pattern. It's also worth our attention. But this is a bit personal, because all of us have different risk view on the risk. So somebody likes to trade during the major event released. Somebody like to wait when they will be released and then take the position. But here is the pattern. I just would like to share with you what I see. And this pattern is bearish, and by this reason I call you to close the long positions, because probability suggests that this is not very reasonable currently to hold it. Of course anything could happen, but now we're just trying to understand and treat the patterns that we see right now. And these patterns warn us about the potential move to the downside. That's in fact all that I could say at the eve of the European Central Bank meeting and at the eve of the gross domestic product release. So now let's see what will happen. Currently we still have the time, so if you would like still to trade, for instance, the stop grabber on the kiwi, probably you could do this, because you can see the stop will be not very far. It's not very significant range, about 50 pips. It's invalidation point. One problem that we could still get here is the potential fake action, growing volatility at the moment of the release of the data. If even the stop grabber will start to work later, you could be stopped out by the just spikes in the moment of the release. So, but you guys probably know about this very well. I don't think that some more comments we need here about this topic. So that's all. Let's see what will happen. I hope that our long-term analysis, long-term forecast will start to work today.